And welcome to the Leumi Investment Corner. I'm Zev Brenner. With us once again, Michael Zaremsky, head of U.S. Private Banking for Bank Leumi, member of the Investment Committee for Leumi Investment Services. Michael, good to speak with you again.
Great to speak with you, Zev. Thanks for having me.
Hope you're keeping warm. It's the end of the year coming up, and people are concerned, and they say, how do my money make more money? Do I put it in the bank, but they have low interest rates? So what are you recommending? What do you see from your clients? What is a good way for people to consider, especially for the new year coming up?
Zev, thanks for the question. I think it's a very interesting question that many people are asking, and I think people are still familiar with the old days where you can go into a CD and make a pretty meaningful rate of return. Those days are long gone, and with the current interest rate environment that we have right now, and with the recent cuts by the Fed in the third quarter of this year, again, we've seen rates decline even further. So generally speaking, across the market, there is a quest for bonds, there's a quest for income, and ultimately that's really driving down yields, and that's driving down the return potential for fixed income securities. So we continue to get a lot of people asking, how do I get a better return in this space? And a lot of what we're talking about and a lot of what we're recommending is, recognizing that, first off, yield equals risk. If the risk-free rate of a 10-year Treasury is 180 basis points, roughly, anything above that is a market risk of some sort. So typically what we're trying to do is engage clients to understand what types of risks they're willing to take, and then try to alter portfolios to, kind of help them achieve some of the results that they want.
So now is a good time for people to start thinking ahead, right? Because as the year ends and people looking to start anew, so to speak, so people are starting to make plans. So what to do right now?
Yeah, and what we recommend a lot with our clients is also talking to them about what are the different risk buckets that they have within their portfolio. So just as an example for me personally, I have a checking account that obviously I'm going to keep very liquid with cash. I may have a savings account that will be a little bit more risky, so to speak, because I still really need the cash in there. But gradually, as I bucket out my assets into different tiers, there's different elements of risk I'm willing to take. So, for example, 529 college money for my younger children, I'm very comfortable with equity risk. 401k money or IRA money that's out there for long term, I'm comfortable taking equity risk. So again, I think when people look at their shorter term assets, I think a lot of what we're trying to do is segment things into what needs to be purely in cash, what needs to be in things that are near cash, and what are the elements and obstacles that they can get into that would be something a step further. And as I said moments ago, yield equals risk. So the question is, what risk are you comfortable taking? What risks are you willing to accept? So when something is offering you a yield significantly above treasuries, again, typically there's going to be a duration risk, which is, the time length that you're willing to own a security for. So again, a 30-year bond is going to have duration risk. There's going to be credit risk, so things like corporate bonds, high-yield bonds. There's other risks out there in terms of structure, so whether things are floating, things are preferred, things are callable. In certain cases, there's foreign currency risk or foreign market risk, so emerging market bonds, international bonds. And then I think one of the other categories that we've also focused on a lot is equity risk. And there's a tremendous amount of companies out there that are producing very stable dividend yields. And in a lot of cases, people are using high dividend-paying equity to change around or to alter the risk-return parameters of their income-producing buckets. So again, by introducing some equity that may have a pretty significant dividend component, you're not getting fixed income, but you're getting something that's going to have a big income-producing component of it. It's not really going to behave like an aggressive growth equity security. It's not going to behave like a fixed income security. It's going to be something in between. And again, the way that we look at some of these portfolios is by constructing portfolios that have elements of each of these factors. You can hopefully get a little bit more of a diversified stream of revenues from diversified sources of risk. So while we probably don't want to be all in on credit risk, on structure risk, or duration risk, mixing and matching some of these elements and including some element potentially of equity as well as currency, where you're still able to take advantage and get higher than average yields, again, at the right proportion, at the right mix, it could enhance what someone can get over, pure money market, let's say.
It sounds like we have to diversify and not one size fits all based on the different options out there and how you maneuver and how you apportion it. It sounds like you need an expert to help you navigate it. I don't think the average person can do it on their own.
I would agree with you, Zev. And, again, also a lot of it becomes very personal. Again, the more liquidity you have, the more you can experiment kind of on the back end of your portfolio. For me, that may be 10%. For you, that may be 5%. For someone else, it may be 20%. So a lot of it is knowing how to mix and match the different asset classes and knowing what the right risk tenor is for your own personal needs.
Absolutely, and everybody, there's not one size fits all. I guess it's custom where each person has to reassess what works best for them.
Exactly.
If people want to get more information about Bank Leumi and its financial services, how can they do so?
They can just reach out to me. I think you have the contact information, so we're happy to engage. And, thank you for the time this afternoon.
And I'll give out that number if you want to reach Michael or any part of the team. It's 212-407-4372. Michael Zaremsky, thank you. He's the head of U.S. Private Banking, Bank Leumi, member of the Investment Committee for Leumi Investment Services. Thank you for joining us.
Thank you, Zev. Thank you.
And we're going to be right back. Don't go away. Stay tuned.